All right, folks, welcome back. It's going to be a brief review on FOMC Wednesday, and we're looking at the dollar index on the left-hand side. So we had our imbalance, old levels here. Again, look at the previous commentaries and you'll see what these levels have been referring to. And we came back down and found a revisit back into the 10642 level. You can see that over here on the hourly chart. Today we had an ability to get up into this small little fair value gap running out buy side liquidity, and here as well. Ran up to that, and then FOMC sent it lower. We do have a small pool of liquidity resting in here in the form of sell side liquidity. Be mindful that we can come back down into this area here, and I think that's where we're going to go for dollar. Euro dollar daily chart. See, we had finally moved down into the fair value gap on this daily chart, much like the pound dollar did, and pound dollar's been off on a run. We've traded down into it today here for euro dollar, and I like this imbalance up here and the old low at 1.0340. That's something of interest. I like the idea of this gap over here being revisited and sending us up into that there. So the market had that fair value gap here. We had sell side. It traded down into it today at FOMC. We rallied through it, took out the short-term high. Buy side liquidity in here looks promising on the upside. Pound dollar daily chart over here. This is where I think it's going to go to for the upside. Market has traded through this old imbalance here. And today, the only thing we had here was a run on sell side liquidity, and then FOMC sent it higher. Nothing in here would have been obvious for me. So we'll see if it wants to continue moving higher. Again, the fair value gap here on the daily chart, that's being shown over here, so we had a nice optimal trade entry. But that right there, this was the reason why I said cable or pound dollar was a better technical condition than that of the euro. And I'll go back up one more slide just so you can get a contrast. We had the cable market trade into its fair value gap and start moving away, and then look at euro dollar. It just got into it yesterday, and today found its way down to its low and then rallied up. NASDAQ daily chart on the left hand side. Note these relative equal highs up here. If we take off above these highs and we start to rally even more, this could be where we're ultimately going to be drawing to. But for now, near term, we're here. There's a small little S&T divergence between the S&P and NASDAQ, just be aware. But I think that's just going to be short-lived. I think we'll end up seeing NASDAQ run to 12,973. So I'd like to see it trade down into this buy side imbalance, sell side inefficiency a little bit deeper. It doesn't necessarily have to come back to this old high, but coming down into that area, pick up a long and run relative equal highs and see if we can get up into 12,800 and then maybe 12,975, attacking the buy side here. All right, so we have the bullish order block here with the fair value gap. It trades down into that here, that blue shaded area. That's what this is over here on the hourly chart. And then the imbalance. I mentioned this in the recording I gave you guys last night, stating that NASDAQ has completed its imbalance here. And we anticipated that that would be repeated in E-mini S&P, but it actually failed to go lower. So I created something of an S&T divergence. You can see how we moved higher, and consolidated, ran higher, and an FOMC just took off. Didn't give us any kind of real setup to work with, and didn't even take out the short-term high here as well. So one-sidedness, one of those days where I wasn't really focusing on NASDAQ, but even if I was, I would have missed the move. today at FOMC. In the S&P daily chart, left-hand side, you can see short-term high here. That is noted there. We have our imbalance here. Price dug up into that. I'm thinking that we could go reaching into the 40.75, so about midpoint in here. That could be the next upside draw on SPOOs, and closing in the imbalance. That would be, in my opinion, the target to reach for if we're going to continue going higher. So we have the fair value gap. I mentioned this last Friday, and I felt that we were going to drop down into that. So Monday's trading, Tuesday we dropped down into it, and then today sent it higher to take out the short-term high and trading up into this imbalance here. On the fair value gap on the daily chart, that blue shaded area, you can see we traded down below for sell side liquidity here and into that fair value gap. I mentioned on Twitter to take your short covering at 39.20. That was a really nice level. Even in the afternoon, went one more time below it and then rejected it, sent it higher. This was the gap. Now, initially I had sell side liquidity of, my opinion, the interest that I was going to look for that to be tagged. I wanted to see FOMC drop down in ahead of time to run that to start setting up a situation where we could see a shift in market structure that would be bullish, then a fair value gap that would form, and then capitalize on a potential run based on that fair value gap here. So I was looking for sell side to be tagged first, and I gave levels on NASDAQ and I gave levels on S&P. Neither of those were tagged. The market just remained firm. And then as we approached the 2 o'clock hour, my local time rate for FOMC's initial release, there's two stages to FOMC. It's 2 o'clock and then 2:30. This candle here is the 2 o'clock hour. It started to drop down, and I was watching the 39.62 level. It was based on this fair value gap on the hourly chart. I wanted to see it trade down into that, and that would have been a long for me. Now, initially, I wanted to see it trade down in here, but just kept driving higher. So ahead of FOMC, 2 o'clock and 2:30, it pushed in a pretty good premium, but left this short-term high here. The market did not drop back down into a short-term discount between this low and this high, so I did not participate. It didn't give me an opportunity to do what it is I was looking for, so this was a complete missed run today. And that's fine. It's good for you to see me miss something like that and see me look for specific levels and not see them traded to, because that's going to happen in your trading too. Okay, there's no harm, no foul. There's no failure of the model. It doesn't mean the system or the idea or concepts are failed or flawed. It just means that this is FOMC, and sometimes it just wants to rip everybody's face off, and you may not get an opportunity to get in and participate. So zoomed in on here on the hourly chart, that's the gap here, and I wanted to see it drop down into that. Had it done so, I would have taken a long and aimed for a partial here and a partial here. I would not have been getting out above 41.31. That would have been, I would have been completely out of the trade. And I think it's fair enough for me to say something like that and know that this matches pretty much what we'd be looking for. The reason why I was looking for this here is because I looked at it after we had priced in this run up going into 2 o'clock. I said in Twitter, I said, monitor 39.62. That's a fair value gap right there. And I saw this low and this lower low. So we already had stop run, and then we had the displacement here. So this was a fair value gap. This was the model idea, but it didn't form. Okay, so I'll show it to you again. Low with sell side taken. Shift in market structure here. It rallies up, so you would put your fib between the low here, and equilibrium would be somewhere in this area here, eyeballing it, and you had the fair value gap. So if it dropped down into that, just touched that level right there, that would have been enough for me to go long. But it didn't do it, and that's fine. It's no skin off my back. I don't really care, and like I said, it's good for you to see it. I'm being honest with you. Sometimes I'm looking for setups, and they just won't give me the price I'm looking for, and that's fine. There was no live trade loss, none of that stuff. There was no position at all today. So I watched. I gave a little bit more room to show me something else going into 3 o'clock and 3:30. At that point, I was done. I wasn't interested in doing anything because it had moved already too far for me to consider doing anything with it. So it is what it is. So it's just a matter of studying price and monitoring it and then logging it. And this is a missed opportunity for ICT. So hopefully you found this one insightful. We'll be back at it tomorrow, Lord willing. Until then, be safe.